it's the same thing. Everyone was like, shit, where did this come from? It became a very, very big ETF. It's exactly the same. What people like to do, because there's so many new participants in the industry, they think it's all new and different. When you've been around as long as you and I, you realize nothing is different. We've gone through all of this before. This just happens to be a bigger, faster moving asset, but it's the same as GSCI was. It's the same as the gold ETF was. It's the same as the NASDAQ was when we didn't understand what it was and why it went up all the time. It's all of these things combined, right? They're like, it's a technology, it's a diversification of reserves. So if the US is going to do it, we're going to do it. So there's different groups doing different stuff. There is a bunch of people who still don't really want to do the homework on it. They're like, we don't know, it's too volatile for us. But I think usually it's the first mover advantage in this.
Even though the world economy is slowing down, a strong force is developing underneath. We are on the verge of the next great acceleration, not a recession, according to macro specialist Raoul Pal. Pal thinks the conditions are right for a huge upswing as inflation declines, central banks change their attitudes on policy, and liquidity slowly returns to the markets. Raoul contends that we are about to enter what he refers to as the everything code moment, a time when demographics, digitization, and narratives come together to spark a surge of growth that could outpace the rally we witnessed in 2020 and 2021. This includes the emergence of exponential tech, a renewed crypto cycle, and a comeback in emerging markets. Add in the upcoming wave of AI productivity, dovish central banks, and a Fed potentially forced into easing by political pressure. Raoul sees a perfect storm for risk assets. But this time, it's not just about crypto or tech. He's talking about a broad-based rally across equities, bonds, and digital assets. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And it took a long time for people to believe that. They thought it's something different, it's something unique. It's a macro asset. So you apply the same things that I've always used, which is liquidity, business cycle, all that stuff, plus a bit of technicals and sentiment. There's no voodoo here. It's pretty straightforward as an asset. It's just more volatile. So it's harder to deal with, but you were right. What I was seeing was like the liquidity indicators like Global M2 had stabilized and started going up. It leads Bitcoin. Bitcoin was following it almost perfectly. So I was starting to look for the bottom. Then I start looking at stuff like, okay, where's sentiment on NASDAQ? Because it's tech stock, same thing. It was in the gutter. Right. Sentiment was the worst I had seen since COVID. And that was across the board, across everything. Even hedge fund long short, everybody was max bearish. And I'm looking at liquidity. It's going up. I'm seeing the market getting fearful over a narrative. And I'm like, well, what is the likely outcome here? Are they going to have 150%, a trillion percent tariffs on China? No, they're going to reach something normal. So you've gone from peak headline fear to things could only be better from here. So for me, it was like a no-brainer of an opportunity, both in tech stocks and in crypto. And so going forwards now, normally speaking, this is the period, my framework is about, them rolling the debt and having to provide liquidity to do so. Mm-hmm. And so what we've got is a lot of forward-looking liquidity coming out of whether it's the weakness of the dollar, whether it's other countries using their balance sheets, a number of different mechanisms. And all of that to me is suggesting that the rest of this year is going to be very strong. And I was kind of thinking the NASDAQ was going to be a V-shaped recovery. And my God, it was a V-shaped recovery. And people are still underweight and short. It's a hell of a setup. We overlaid the chart of 1997, the Asian crisis, was a short, sharp shock, versus now it's almost identical. The 4-month period leading up to it, 4 or 5 months leading up to it. And that was a V-shaped recovery as well, because everybody was caught off sides because they thought the world was going to end. Liquidity came into the system. It was via the Fed that time cutting rates and all the other central banks. And the market just went up in a straight line for the next 2 years. It feels that way to me. And I think you're right. There is a risk here that we rerun 98, 99 or 99 because you've just taken all the tail risk. Let's assume that Saudi, the US, and Israel do a deal with Iran. That feels like it's going to happen. Let's say that there will be a ceasefire in Ukraine, and let's assume that the Chinese will come to the table, do something reasonable. Those three things happen. We've taken all of the left tail off the table. And people are going to be like, oh, but inflation's going to come back. And they're going to keep saying that for 18 months, which they kept saying as inflation's fall. So I think it is not a small probability that we have a really blow off kind of next 9 months or so. The last Trump cycle in 2017 We had the same thing. The market corrected in the beginning because everyone's fearing tariffs and the same narrative. The Fed were raising rates and doing the balance sheet runoff. And the market screamed higher all year because the Chinese were stimulating, the Europeans had to stimulate. So it feels like, even if the Fed don't do anything, I still think the Fed cut, but let's assume they don't. Well, that's not a prerequisite for the market to do anything. As you said, as long as rates aren't jacking higher, everything's fine.
Raoul Pal presents an alternative perspective that is based on actual macro statistics and money movements, even if the majority of headlines are still focused on inflation and geopolitical threats. According to him, the factors that drive global stock markets' liquidity, mood, and the larger business cycle are also closely related to cryptocurrency, making it more than just a specialized asset class. Crypto tends to move more sharply than regular markets when these forces change. Higher volatility but also more upward potential are implied by this. Raoul observes that those changes are already taking place. Global M2, a crucial indicator of the money supply, has halted its decline and is beginning to climb once more. This pattern has historically foreseen significant movements in riskier assets like Bitcoin. Furthermore, Raoul states that although a rate decrease by the Fed would be beneficial, this surge is independent of it. More importantly, macro worries are starting to subside and the Fed isn't tightening anymore. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Do you think that he's going to have a material effect on the price of Bitcoin, or is this a sideshow?
No, it's real. And I'll tell you why it's real. I've just come back from the Middle East. All of the sovereign wealth funds are now buying. Right, these are the largest pools of capital in the world. We're hearing it out of Saudi, out of Abu Dhabi, out of Qatar, and out of Bahrain. And why that's happening is because the US has become crypto-friendly. It's the green light. So the US will get some regulation through. There'll be a bit of a shit show and debating about it and the usual stuff, but they will get some regulation through, which is the clarity that all of the pension funds need. So they're waiting as well. So there is a lot of buying to come from the really big players who've been waiting. Like Goldman has not been able to fully build out its desk, and JPMorgan haven't. They've had crypto for a while, but only for certain types of customers. But they want to build out suites of product, but they've been waiting for regulatory clarity. So, yeah, I think it's a big deal, actually. I really do. The institutions are still either trying to figure out what this thing is. Yeah. Right? I had a conversation with one of the biggest kind of financial asset management firms in the world yesterday, based out of the US. And they're like, they've even got a crypto division, but they're other kind of where they allocate the assets. They're like, we don't know how to deal with this. So they're still trying to figure out what it is. Yeah. Like they haven't figured out it's a macro asset. Others have. The sovereign wealth funds obviously are just doing it for diversification of reserves. They're like, it's a technology, it's a diversification of reserves. So if the US is going to do it, we're going to do it. So there's different groups doing different stuff. There is a bunch of people who still don't really want to do the homework on it. They're like, we don't know, it's too volatile for us. But I think usually it's the first mover advantage in this. And, again, it reminds me a lot of back in the day when Goldman rolled out the GSCI index and nobody had commodities in their portfolios, and that team had to go around and sell commodities to everybody.
Right. Look, guys, it's backwardation. It works like this. You roll into a cheaper contract and you generate profit from that, right? Like
the clients would say, but it's too volatile. And you say, yes, yeah, but right. Part of a diversified portfolio, it's exactly the same thing, right?
That's right.
It's exactly. And also, we were around when the gold ETF started, and it's the same thing. Everyone was like, shit, where did this come from? It became a very, very big ETF. It's exactly the same. What people like to do, because there's so many new participants in the industry, they think it's all new and different. When you've been around as long as you and I, you realize nothing is different. We've gone through all of this before. This just happens to be a bigger, faster moving asset, but it's the same as GSCI was. It's the same as the gold ETF was. It's the same as the NASDAQ was when we didn't understand what it was and why it went up all the time. It's all of these things combined, right?
Totally brilliant, Raoul. Totally brilliant.
Right, the three big financial conditions thing. What we found is that leads like the ISM and other stuff by about 9 months. And it leads liquidity by about 6 months, something like that. Liquidity is what drives Bitcoin and NASDAQ, and it leads it by 3 months. So global M2, let's say, leads Bitcoin by about 3 months. I found out, I was like, what's going on with gold? I put it against against financial conditions. It reacts in real time to financial conditions.
Wow.
I'm like, holy shit, I didn't figure this out before.
Of all trading securities, right?
Of all the things, well, because it's a pure currency asset, right? It's the pure thing. And so the moment financial conditions ease, gold moves. And so it's leading everything else. Which was, we were kind of thinking, is it leading or is it doing something weird? Is it trying to price in some catastrophic risk? No, it was just pricing in the fall in the dollar, the fall, rates didn't really fall a great deal, but the fall in oil.
Raoul Pal thinks that the cryptocurrency movement is gaining significant traction and is merely beginning. He claims that after visiting the Middle East, he is witnessing the biggest and most powerful capital pools in the world, sovereign wealth funds, start to take cryptocurrency seriously. Saudi Arabia, Abu Dhabi, Bahrain, and Qatar are no longer only observing from a distance. They are acting, because regulatory certainty is now being achieved in the United States. It's obvious that regulation is on the horizon, even though the political process may involve discussion and delays. And when that occurs, the floodgates open. Global banks like JPMorgan and Goldman Sachs, asset managers, and pension funds have all been waiting for that approval. Raoul also notes that the role of cryptocurrency is still not entirely understood by many institutional investors. It is difficult for even companies with cryptocurrency sections to incorporate it into their larger portfolios. Some people think it's too complicated or volatile. However, sovereign wealth funds are approaching it more straightforwardly as a technology and a way to diversify their holdings. They're not making things too complicated. Raoul is also reminded of the early days of gold and commodity exchange traded funds, when conventional investors rejected them as too volatile, before eventually accepting them as necessary components of a portfolio. With cryptocurrency, he thinks we're experiencing the same cycle, albeit on a much bigger and quicker scale. Raoul Pal perceives a significant change in progress. The movement is increasing. Organizations are getting ready. Sovereign wealth is being purchased. The conventional financial community is also beginning to realize that cryptocurrency is the future global asset class, not a passing fad. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.